Hello, hello. All right. I had to hop on live today and talk about some big news that has been impacting the real estate industry. My name's Anna Kibble. I'm your partner for everything real estate. I am a real estate professional here in the Denver metro area. Here's what happened yesterday. The Fed cut the rate, right? This is the first rate cut since COVID, right? This is a big deal. And the internet is going wild, right? Today is the day to refinance. Today's the day to buy your new house. You get a 0.5% reduction in your interest rate. And as awesome as that would be, it's simply just not the case. Yet this Fed rate cut is big news, good news. This is a great thing for everything. So if you're just a regular person, this is great news because that Fed rate, that is the rate at which banks borrow money at. Right. So now it's less expensive for these banks to borrow money, which means they're going to be charging you less for the money. So any kind of variable interest rate that you have, credit cards, all of those pieces, this is going to account for that. If you're in the market for a new car or a new home, that's going to also be impactful. Here's the deal. The impact on mortgage rates already happened because they've been anticipating this move. Here's what I want to show you. It was on the screen when we started. I want to come back to it. I'm going to share this. Okay. So Lawrence Yun, chief economist, National Association of Realtors, he says this half point rate cut decision is the beginning of several rate cuts that should go into 2025. Okay. Next rate cut just after the presidential election. But here's the piece. Mortgage rates have already been anticipating the Fed's likely path, and that's why the rate has fallen substantially over the last several weeks. Okay, so the rate is already they predicted this was going to happen, and so the Fed rate cut has just kind of matched what's going on with mortgage rates. But here's the interesting piece. There's going to be additional rate cuts, which means mortgage rates will try and predict that trend and keep up with it. So um, it's very likely that we'll see mortgage interest rates falling a little bit more in the future. How quickly will that happen is anyone's guess. But here's what else he says, and this is really this is another important piece. Here's what else he says. He says, if you're waiting, consumers who were priced out earlier should now be back in the market. But he says if you're waiting on rates to get lower, you're going to be out of luck. And here's why, right? We're in a really unique situation right now. The real estate market is very reactive to what happens with supply and demand, right? But it takes a little while for that reaction to kind of trickle through the entire market, right? So right now, rates have already, like Lauren said, right? Rates have already adjusted down. They've been adjusted down for several weeks now. And we can take a look at, let's see for current rates. So here's what I like to take a look at. You can pull this website up too. This is a public domain. You can have the same information. These are today's mortgage rates, and it comes from Mortgage News Daily. My favorite. This is one of my bookmarks, especially right now as there's so many changes inside of mortgage rate. I'm looking at this really regularly. You might look at this as it pertains to your move or what you're looking to do inside of the real estate market. But we can say, I'll refresh this here just to make sure. So we're sitting today at just over 6% on a 30-year fixed. Now, I'm hearing reports from my lender friends that they are getting VA and FHA loans locked, in the mid fives, which is incredible. It's been such a long time since we've seen those kind of rates. And because we've got kind of a slower fall mortgage market here or home market here, those mortgage rates are going to go even further to securing you a lower price. Um, so let's take a quick look at what's happening in the market, because this is really interesting. Okay. So I've been tracking the Denver metro area real estate market for quite some time, for years, in fact. And so I wanted to see what's happening in the market today and how does this relate to like what was happening last year. Okay. And just for fun, I'm going to pull it up really quick. This time last year, mortgage interest rates on that 30-year fix were right around 7.35%, 7.35%. And today we see they're at 6.17, right? So substantially lower today than they were 1 year ago. Here's the numbers. Here's what's happened in the last week. In the last week in the Denver metro area, we've seen over 1,500 new listings go on the market. Now, that's kind of atypical for this time of year. Usually it slows down a little bit and we might have a lower number than that. But it's much higher than it was this time last year. We're up 29% in new listings coming on the market from last year. Okay. At the same time, our pending contracts. Now, these are homes that have a contract on them, so they've come off the market. They're under contract homes in the last 7 days. 1,329, and that's actually just about flat from last year. It's just barely down from last year. So this tells me a couple of things. The first thing it tells me is, with the pending contracts being about flat from last year, is well, people are still making a move, right? There's kind of this perception on the market that there's no one's buying or selling real estate anymore. They're not moving. They're just not doing it. Well, here's the case. They are doing it. They are doing it at about the same rate that they were doing it last year as well. Okay. That's going to change. That's going to change in a big way as interest rates go down. More and more buyers will have the affordability to get back into the market. And so that rate is very likely going to start climbing here, where we're going to be outpacing homes under contract from last year, because there's more and more buyers getting in the market. And I know there's more buyers getting in the market because oftentimes when people sell a house, they also need to buy a home. And I think that's what we're seeing right here is we're seeing people who have wanted to sell their house and buy the new one, but that high mortgage rate has just made it, not very feasible. It would have been a very expensive step up. Now the mortgage rates are coming down and they're saying, you know what, we can do it. Let's put our house on the market. We're ready to move. We're ready to downsize. We're ready to move up. We're ready to, move into a different part of the country. We're ready to do whatever that is that we've been waiting for. And so oftentimes these new listings on the market are going to happen before these new pendings, because people will need to sell their house so they can buy the next one. So I think that's what we're seeing right now. We're seeing mortgage rates have come down. We're seeing people are ready to make their move. So the next number we're going to see come up is these pending contracts. And when that number comes up, well, that's when buyer competition starts coming up. And that's when housing prices start to raise. Okay. If this number weren't pretty much flat from last year, then home prices would probably be falling right now. And the truth is they're not. They're very stable across the board, because those interest rates are keeping enough buyers in the market, that we've got a pretty solid exchange of supply and demand going on today. This is the real story. This is why, regardless of any of those smart things I just said about hitting the market before demand increases, so that you can save money, time, hassles, you're not going through bidding wars, all of those pieces. This is the big reason why, if I were thinking about buying in the next 6 months, I would do it right now. And that is, look at this inventory. We've got almost 15,000 active available homes in the Denver metro area. Multiple listing service available for sale right now. This is up almost 50% from last year. And in fact, this is close to the highest number we've seen in years and years and years. The highest numbers that we've seen have just been over the past, couple of months. It creeped up a little bit higher than this briefly, but almost 15,000 homes to choose from. My goodness. A couple of years ago, and even a year ago, right? I would be talking to somebody who's thinking about selling their house. They need more bedroom space, they need to move up, they need to make this move, right? But the question always becomes, if I sell my home today, where am I going to go? Right? There's just no homes available for sale, or surely the home I'm looking for isn't on the market. And, I'm looking for this unicorn and I can't bet on this unicorn. So I'm just not going to sell my home. Well, right now, your home is on the market. The house you've been looking for is on the market, or at least it's the best chance that there has been in years that the home you desire is on the market. So partner that with this lagging demand, because not everybody is Johnny on the spot, right? Partner that with the lagging demand and the low interest rates. And I tell you, you have got yourself a recipe that makes this really one of the best times that we've seen in a while, and probably will see in quite some time, to make your move. So, um, is this for you? Right? Do all of these stars align in a way that makes sense for you to make that move that you've been thinking about? Well, talk to me. Let's have a strategy session. We'll put it all together. We'll look at your situation, your circumstances. We'll look at the inventory on the market, see if it makes sense for you to move right away. Give me a call. I'm at 303 669 21.